Let's also, in fact, on that note, welcome in Amit Shah joining us in the studio of Indiabulls Ventures. Hi. Amit, good afternoon. Ashish Chaturmota joining in as well. Ashish, just wanted a call on an info edge from you very quickly.
Hi Nivita. So I think as far as info is concerned, this is one stock which has been consolidating for a while, for last 5-6 months, and has formed a very strong base somewhere around 1160 zone. And in today's trading session, we have seen a good breakout. So technically speaking, now this 1150, 1160 will act as an extremely important support zone. And looking into the structure, it looks like stock has a potential to cross its previous all-time high, which is around 1450, 1460 zone. So I think at least a 200-220 rupees kind of upside from current levels could not be ruled out in InfoEdge, but one need to understand this is more from a investment perspective, because this stock is very low liquid in nature, and generally it's not a momentum stock, so one has to have a buy and hold kind of strategy while initiating a long position in InfoEdge.
All right, Dilip Buildcon is another stock you should be looking at the lows of the day right now. It's a cut of 10%. When we started out the show, that stock was down about 7.5%. At the moment, look at the chart over there. It's in fact 11.5% down in trade right now. Very weak structure as far as the last few sessions goes on this one. Just pull up a 1 month chart on this counter as well to give you a slightly better picture of what's been going on. There you go. It's down 20% in the last 1 month. Of course, Amit, this has been one of the smartest performing mid caps out there, but recently it's come under a lot of pressure and now down 11% in a single trading session. Does it still make sense if somebody is looking to short this one?
See, Dilip Buildcon is actually at some crucial support zone. So it's as we speak, it's exactly at its 200-day moving average. But today's volumes are quite sharp, and I think there's a lot of, I would say, selling off of positions at this juncture. So I would not rule out some further correction coming into the stock. See, in this phase of the market, we are seeing a lot of mid caps, especially the ones which have run very hard in 2017. The stocks which have become like 4, 5, 6 baggers kind of stocks. We are seeing the trend in the market that they are seeing sharp corrections even in stocks where we are seeing good earnings, etc. So yeah, this is the behavior of the market that we are seeing. So yeah, I would not rule out some further correction unless and until it shows some sign of stability.
Can't rule out further correction in Dilip Buildcon, coming under severe pressure, in fact, at the moment, as far as Dilip Buildcon goes, and that's in spite of posting strong numbers, but a lot of uncertainty continuing. The management hasn't really managed to assuage those fears that are in the market. We'll take a quick break. On that note, up next, we put the FMCG sector in focus. Nielsen has come out with a report. We'll have Sameer Shukla of Nielsen joining in to help break down what the outlook is for the sector. Stay tuned.
Welcome back. You're tuned into the trading day. Consumption stocks have been on fire lately, and 2018 has been a good year of growth for them after several quarters of stress, especially in the aftermath of demonetization as well as the GST rollout. It's the rural consumption theme that is driving the sector's growth going forward. That's the word coming in from market researcher Nielsen's latest report on FMCG industry. We have a guest joining us on that, but before that, let me bring in Neha Tyagi with a little more color on that report. Neha.
Well, that's right. A combination of buoyant consumption led by rural demand and the waning impact of GST and demonetization will see the domestic FMCG industry grow in the range of 10 to 11% in 2018. Now, when compared with the 13.5% growth registered last year, the growth figures appear to be weaker. However, the growth witnessed in 2017 was on a low base, which is not the case in 2018. Now, growth in calendar year 2016 was around 7 to 8%. In fact, the year has gotten off to a very good start with 3 months of January-March 2018 registering 11.3% growth, and a major chunk of it is also consumption-led. Now, looking at the current quarter, Nielsen forecasts a high single-digit growth in April-June quarter. Food categories are expected to continue to grow significantly faster than personal care and home care categories. Subsequently, July-September quarter is expected to grow slightly higher than previous quarters, driven by an increase in rural demand. The rural markets that had growth slowing down in 2017 have bounced back in the last 2 quarters. In fact, if you look at the March quarter numbers, rural with growth of 13.5% is ahead of urban that grew only 10%. Good monsoons are expected for the third consecutive year, which is definitely the kind of boost that will help revival of the consumption across, but primarily in rural, yes. This coupled with infrastructure focus, rural initiatives by the government announced in the budget and in the run-up of Lok Sabha polls will further drive disposable income and hence demand. However, a sustained increase in global crude oil prices may bring headwinds, and monetary policy in the upcoming quarter will define the trend for FMCG growth for the remainder of 2018. Consumer inflation to continue be a concern, growing at higher than anticipated, again, primarily led by high crude oil prices.
All right, Neha, thanks a lot for taking us through that. So clearly, looking at a good year as far as FMCG goes, that is the way we've been seeing the stocks reacting as well. We have Sameer Shukla of Nielsen South Asia joining in. Sameer, good afternoon. Good to have you on. This is a very interesting report that you've put out because the very positive outlook for calendar year 2018 as far as the FMCG sector goes. But that said, the forecast is lower if we compare it year on year. Is that simply because of the stronger base effect that we're looking at, or is it also some other factors playing in? Perhaps we're overdoing the sort of optimism with regard to the monsoon and these other factors?
Yeah, thanks, Nivedita. So we just heard Neha talking about various tailwinds that we are seeing in the FMCG industry. Now, while you may see that 10 to 11% forecasted growth in 2018 calendar is a tad lower than what we saw in 2017, but that was largely on the base effect part. And we also to see that in the previous 3 years, 2015-16, FMCG industry grew at only 7 to 8%. Now, in a country with a population growth of 1.2% and a bit of urban migration happening from the rural areas, various headwinds that we just talked about, whether it is in terms of GDP being buoyant, monsoons. This is the third consecutive year when we are forecasting that monsoons will be good and decent, which is coming on the run-up of 2 previous bad monsoons. Also, various benefits that have been accrued to the manufacturers at FMCG because of GST, be it in the form of the lower GST regime rates as compared to the previous regime, or also in terms of the supply chain efficiency because of one country, one tax. These all benefits would be working as a good, strong tailwind, and that's why we are forecasting that 2018 we'll see FMCG industry growing in double digits.
All right, double-digit growth. You've also highlighted, of course, the rural push. Now, give us a sense. Historically, rural has been better than urban, hasn't it? Or am I mistaken there?
Yeah, right. So rural markets definitely have shown a higher growth as compared to the urban markets, for the simple reason that the headroom in rural areas is much faster, much bigger. And also in terms of the commodity to branding, because see, when we talk about the industry here, we're largely talking about the branded packaged products. So the loose to branded, that conversion is also happening at a relatively faster pace in the rural areas. So because the headroom in rural is high, rural growths have always been higher. So if you see past 5-6 years, rural growth to urban growth has been in the ratio of 1.3 to 1.4. However, in 2017, because of the GST rollout and also some bit of the follow-through of demonetization towards the early part of 2017, we had seen that the rural markets were under sudden stress because wholesaler component on which the rural market is largely dependent on was under stress. Now that factor has gone off, and what we have seen in Q1, which is Jan, Feb, March of this year, the rural growth has again gone back to the original buoyancy, and the differential with the urban growth is again back to 1.35, 1.4 levels.
All right, Sameer, let's talk segments then. There have been a lot of reports recently about the Ayurveda segment. This has been where there was a lot of hope and optimism, especially with a player like Patanjali in the fray. But perhaps that space isn't growing as fast as it was anticipated. Give us a sense then of where you see growth coming from segmentally.
Yeah, so naturals is a global trend, Nivedita. So what we have seen is across the globe, naturals, health and wellness is the new mantra. And we did an analysis last year where we saw the trend in Indian market over the last 5 years, where we found that in the top 5 FMCG personal care categories, naturals were already occupying a 40% space. So 40% contribution was coming from the natural side. Now, what was equally interesting to note is this natural pie is increasing year after year. And in the last 5 years, natural pie has gone up by 5 percentage points. So almost 1 percentage point increase every year is moving towards the natural side. So that's a good trend. And a lot of this can be attributed to the manufacturer's action. And we see a flurry of new products launches also happening in that segment. So going by that outlook, hopefully natural pie is going to only increase in the coming years.
We are already seeing that play out for some of the established players as well. Thanks, Samir, for joining in and sharing details of your report with us. That's Nielsen's outlook on the consumption universe in the year ahead. Meanwhile, earnings keep coming in thick and fast. Power Grid is the next one in focus. Amit Shah, the CMD of Power Grid, is in fact joining us to run us through the numbers here. Afternoon, Mr. In fact, we had a reporter speak to the management of Power Grid just a short while back about their numbers. It was a weak quarter for them, but there were a couple of factors at work. That stock is up about 1.5% in trade. Let's hear him out.
See, this quarter, if you say it's quite satisfactory quarter, our revenue has gone up by 16%. PAT has gone up by 5% compared to the quarter of the last year. If you take year to year, PAT has gone up by 10%. Basically, the PAT figure is a little bit low, basically because that this year we have the pay revision. Secondly, the more expenditure we have done in this quarter under CSR. Thirdly, some cut in the CSR. Actually, what happened, whenever the transmission system completed, we filed the petitions. Immediately hearing doesn't do. They allow the provisional tariff. And they do the true-up after 4 or 5 months. In this true-up, sometimes some positive comes or some negative comes. If I have taken more money, that's why this year some negative has come. This all together, this quarter has a little bit more cut. That's how we can say loss there. But at the same time, the base has become quite big. 10% growth is quite okay.
So if we talk about the new orders, are there any orders in the pipeline? And as far as major commissioning is concerned, what are the new, are there any sort of joint ventures that you're also looking at?
See, we have a lot of projects in hand. We have the project worth 90 to 95,000 crore worth in hand. All the things has to be commissioned in 2-3 years. The major projects are Champaku Chetra 1 and 2 HVDC, then Raigad Pugalur to Kerala HVDC, Ghee Energy Corridors, and other transmission lines, small things are there. There are a number of transmission lines. That's why whatever we have done in last 3 years, in last 3 years we have capitalized 90,000 crore project worth. And the next 3 years we have to capitalize more than 90,000 crore worth. That's a lot of work there.
All right, well, that is the management of a Power Grid for you. The results are quite weak, but the stock has been doing well. 1% up in trade on the back of those numbers coming out. But let's put the focus on some of the top gainers for the moment. M&M and Coal India. M&M continuing the up move from trade yesterday, 3% up on that counter for the moment. Amit, just come in on this counter. How is it looking to you at the moment? Do you expect this kind of an up move to continue?
Yeah, of course. It's a very strong stock, I would say. It has actually broken out of consolidation after making a large base of about from 14 to so after a nice base of, say, a consolidation base of about 4 years, the stock is breaking out into new highs. These are always good signs, and I think there's still the stock could easily see 4 figures on the upside and even beyond. So yes, momentum is very, very positive in autos, and especially M&M is also looking very, very good.
Right. In fact, Ashish, you had a call on M&M as well yesterday. That counter continues to do well. Where do you want to revise this to? And something like a Dabur is also another stock that you've been bullish on. What's the call on that?
So, Deep, M&M is a stock I've been recommending on your channel since 785 odd levels. In last one and a half month, we have seen one of the sharpest rally in M&M, and the reason is very, very clear. If you look at, the consolidation phase, I've been talking about this 2014 to 2017. It has been consolidating in a range between 750 to almost 550, and that range has been broken out. And this time with very, very strong volume action as well as delivery, data is also showing a very positive signs. And yesterday we heard about the commentary from the management about the company and the kind of numbers this company has posted. I think going forward, this is one stock, any dip is a buying opportunity. We believe stock is poised for a move beyond 1000 odd levels. So I think it's a buy even at current levels, and any dip towards 880, 875 would be an opportunity to initiate to average your long positions. 840 technically is a very important support, so keep that as a stop loss. And I think in a shorter term, 930 is a target we are expecting, but positionally we believe 1000 is a target one can expect in M&M in days going forward. As far as Dabur is concerned, again, FMCG as a basket is looking very, very strong. Within that, Dabur, Colgate, these are the names we have been betting on. I think Dabur is seeing a very strong price volume activity. We have seen considerable amount of open interest and rollovers being shifted to the June series. So keeping all that in mind, I think any dip in Dabur is an opportunity to initiate a long. Keep a stop around 370 and upside 400, 405 is a short-term target we are expecting in Dabur. Apart from that, even Hindustan Lever is showing a strong signs of again forming a base somewhere around 1550. So in terms of risk reward, again, Hindustan Lever is looking very, very interesting. Keep 1550 as a stop loss, 1650 is a target I'm expecting in Hindustan Lever in next 3 to 4 trading sessions.
All right. In fact, HUL at day's high. In fact, as we speak, 1650 a target there from Ashish. We'll take a quick break. On that note, Amit, Ashish are right here with us. We'll also be joined by Vijay Chopra as well of Enoch Ventures. Stay tuned.
Welcome back. You're tuned into the trading day, a day ahead of the GDP numbers for FY18. Siddharth Zarabi is in exclusive conversation with Rajiv Kumar, the Vice Chairman of the Niti Aayog. Let's cut across to that.
Tendencies to the political requirements. So what I can foresee going forward is a continued emphasis on good economic policies. For example, you will see the rollout of Ayushman Bharat, which is the largest health insurance program anywhere in the world, and which will see the coverage of 50 crore, 500 million people with a life cover, annual cover of rupees 5 lakhs. So that we are all busy, we are all hard at work in making sure that happens. You will also see going forward Niti Aayog coming out with the options for ensuring that farmers receive the minimum support prices, not just for paddy and wheat, but also for the 21 other crops for which the MSPs have been announced. The Prime Minister had said that this will be implemented during the Kharif season, and that is how it will be, and that is what we are now again busy working at, formulating the artificial intelligence, the AI policy for the country. Also busy with the strategy for e-mobility. And we will host a big conference, a very big global summit towards the third or the fourth quarter of this year. So a very busy agenda, which is really which continues to provide momentum to economic activity that's been built up over the last 48 months. And I must end by saying this part, that the last 48 months have been one of the busiest policy months that I have seen ever since I started working in the government in 1989.
Dr. Kumar, I'll come back with a couple of follow-up questions on Ayushman Bharat and MSP, but I want to quickly turn to one of the most important points that is dominating the conversation really at this time, and this is the expectations or views around India's macro health in the backdrop of rising global oil prices. Two impacts to it, one going forward, but in the present scenario, why hasn't the government been able to come to grips with the fuel price increases, and do you think the daily price increases that have been allowed to our oil marketing companies is something that has not proved to be such a great step?
Well, you know, Siddharth, this is a question of whatever you do is not, sort of, how do I put it, that, the government was bold and courageous enough to decontrol fuel prices, and at the time that they did it, which is in complete contrast to previous governments, they were lauded for it, because we did want the prices. Everybody had suggested that it's the best thing to do is to decontrol petrol prices, so that the oil companies, the Indian oil companies, do not suffer and their balance sheets don't get completely out of sync, which had happened in the past. People forget that in 2012 and 13, when global oil prices had reached sky high at about $110, $120, the government of the day had refused to raise the prices, and there was a time when Indian Oil Corporation had almost no money left to import oil, and and that was the situation that we had raised. We don't want that situation to occur again in our country. We want our oil majors to be to be financially sound, their balance sheets to be to be healthy, and this is why this is why the decontrol of the fuel prices. Now the question arises is that yes, should they have been increased on a daily basis? Maybe not, and that is what was left to the oil companies for their wisdom to decide, and I think they may have overdone this. But coming to grips with the oil situation, the government is now for the first time faced with the rising oil price scenario, and I assure you that there is a lot of thinking, there's a lot of deliberations going on within the government to see how best we can handle this. And so the trade-off between rising inflationary expectations due to global oil price rise on the one hand, and the fiscal impact and from there on the impact on the overall macroeconomy is something that we have to sort out, and I can assure you that we will do it, and you will and the government is hard at work at that.
Right, that's the exclusive conversation that Siddharth is having with the Niti Aayog Vice Chairman, and we will get you more on that. But last 15 minutes of trade, Ashish, Amit and Vijay are with us. Crisil, just pull that counter up. It's 15% spike that has come in. Volumes are very high. 6 lakh traded were just 6 lakh shares were just traded on that counter. We don't know if it's a bulk deal or not. Looks most likely, but that confirmation we'll only get post-market closing. But nonetheless, Amit, on the charts, 15% jump on a Crisil.
Sure. So see, Crisil on the medium-term charts had a breakdown below 1760. So that was a big support area for the stock. Temporarily, it had broken down below that level, and now it has bounced back very, very sharply. And today's candle is a very, very aggressive bull candle. Generally, such formations are not easily broken. And generally, what happens is after a breakdown, I mean, if someone is buying with such huge volumes, it's definitely some informed kind of buying that is happening. Retails do not buy in such a manner. So it definitely is a very, very positive sign. My sense is, I mean, we are about to close today, and this close looks strong. I think the stock can easily go towards 2100 and plus levels. My sense is this was a false breakdown, and it could lead to a much, much larger trend on the upside.
All right, 2100 levels you could see on a Crisil at the moment, seeing gains of about 13% as we speak. Amit, just comment on the Bajaj Finance twins as well.
Sure.
Doing exceptionally well today. Again, 1.5% up on Bajaj Finance. Finserv seeing gains of over % How are these two looking to you?
I mean, these two brothers, I would say, I mean, they are looking very, very, very good on the charts. Yeah, even before I guess the results were announced, they were sort of making good base formations for itself. You know, these are are the kind of stocks you don't see much of selling pressure. It tells you the the confidence of the holders. It's a I mean, you don't you never saw any large correction in spite of the market volatility. That itself tells the strength of the stock. And now, yes, Bajaj Finance is looking very strong. It has had its good up move. It's consolidating now. We have a target of about 2400 for Bajaj Finance. Even the other twin is looking good. One second. Yeah. So yeah, even the Bajaj Finserv is looking good. It has made on the similar lines with Bajaj Finance. It has made a good basing pattern, and of course it looks still good for another 5 to 10% upside.
All right, so Bajaj Finance twins looking good in trade right now. Ashish, you spoke about Dabur a short while back, but HUL is a counter that's also on the move right now, 1% up, helping the markets recover as well. What's the call on an HUL currently?
So Deep, we spoke about Dabur as well as Hindustan Lever, and Hindustan Lever saw a very good uptick from those levels. I think we have mentioned a target of 1630, 1640 in a very short term. So I think Hindustan Lever is a good trade and even could be initiated as a BTST trade for an upside target of 1620, 1630 levels. On downside, 1570 should be kept as a trading stop loss for creating a BTST trade. Apart from this, I think Bata is one stock which is also showing a good strength on daily and weekly charts. So here I think some trade could be initiated with a stop below 778 and upside 820 is a target one can expect in Bata in next 1 to 2 trading sessions.
820 target on a Bata India at day's high at the moment. Vijay, I just wanted to get your view on a number of these NBFCs that are buzzing in trade. We spoke about Bajaj Finance, Bajaj Finserv, along with that Indiabulls Housing Finance back on the move, seeing gains of nearly 1% as we speak. And from the mid-cap space, the likes of Griha Finance, Shriram City Union, what are you liking? Any specific names that you're looking at the moment?
Well, I think that all these companies have had a serious run, and amongst all the NBFCs we talk about, I like HDFC and DHFL, and of course Indiabulls Housing. But it's a word of caution at this point of time. Looking at the global macro scenario and the Indian macro scenario, where our country is getting downgraded by Moody's. The GDP numbers have been downgraded by Moody's to some extent. There are a lot of domestic issues, politically, political issues which are there, and of course, with the latest problem which we have seen in Italy. So there's an instability in the eurozone as well. So my sense is that it is better to be cautious and trade cautiously in such markets. Of course, all the NBFCs have been trading at fairly, reasonable and high valuations. So this would be a time where I would suggest that, stay away from financial stocks, may it be banks or NBFCs. So it's better to find a safe haven in maybe, stocks like Castrol, stocks like, the paint companies, Berger and, Asian Paints. Because if at all crude rises, these companies are going to benefit. Maybe tire companies, we've seen a recent uptick in companies like Seat, MRF, even Apollo Tires. So look for opportunities which are seemingly wise to invest in at this point of time and have corrected. I even like cement counters, companies like ACC look good. So rather than being in what is buzzing, it is better to be what would buzz in the coming times. So that would be a very sane idea to be invested in the markets in such times where, one day we see 100 points up Nifty and the other, a day like today, where we have seen almost a volatility of 100, 150 points on both sides. So I think that markets are very difficult to predict. What we can predict is what companies are going to be benefited with high crude prices. The crude price is coming a bit down. So be on the safer side in the market rather than being overexposed to the volatility. So I would say stay put for some time. Another thing, we've got some the results coming for the elections which are in Kerala and all in a couple of days' time. So better to wait for those mandates to come and get clarity on the domestic political situation as well. So I would recommend that be very cautious in the markets at this point of time.
All right, that is the call on the markets right now. Just about recovering once again, trying to move into positive territory. A whole host of mid-cap stocks are again back in focus. Ruchi Soya, the lenders meet has been postponed. They were meeting later today to take a call between the different bids. Patanjali and Adani Wilmar are in the race. Patanjali recently raised the offer up. That was a BTVi exclusive we brought to you. Crisil, we were just talking about this stock a short while ago, has now hit upper circuit and has claimed the 2,000 rupees per share mark already. Amit has shared a target of about 2,100 on this counter, but keep an eye out on this one. Upper circuit coming in on a Crisil. High volume trade that is happening on this counter. Ashish, aviation names are also buzzing in trade right now. Something like Jet Airways has been very volatile recently, seeing some gains right now. Interglobe is up about 2% in trade. SpiceJet is also responding.
So Deep, if I have to take a bet, I think Indigo would be a preferred choice, because here we have seen some kind of base building happening at around 1210 odd levels. But I think it's not a very strong structural trend. It is again going to be very, very volatile within a range, but definitely on downside 1210 is going to be a strong support. At the same time, on upside 1300, 1310 is going to be a resistance point. So ideally between this 1200 to 1300 range, this stock should play. At this juncture, we are slightly near the buy zone, so I think keeping that in mind, 1220 should be kept as a stop loss, and one can initiate a trade for an immediate upside of 1280 1290 zone in Indigo.
All right, 1280, 1290 you can look for in an Indigo. Aviation stocks resuming the up move after the breather we saw yesterday. Ashish, come in on a Pidilite. This is a stock we've spoken about before. It's once again seeing good gains, 1.5% at the moment, up at the moment. How's it looking to you?
Yeah, so no signs of any weakness. In fact, at every day we are witnessing good amount of volume participation with significant open interest addition, which clearly indicates stock is continuously going to see a strong uptrend, and which might extend till 1240, 1250 in a shorter term. On downside, I think now 1160 will act as an important support zone. So keep that as a stop loss, and 1250, 1260 could be looked as an immediate target in Pidilite. Apart from that, Bajaj Finance is one stock which is showing very strong pattern. Technically, it's a pole and flag formation which we have seen. After sharp rise from 1800 to almost 2150, the stock has gone into a consolidation phase for last couple of trading sessions, and now we are seeing signs of breakout. So I think 20 to 50 could be seen as an immediate target in Bajaj Finance. For this, I think 2080 should be kept as a trading stop loss, and an upside target of 20 to 50, 20 to 60 could be looked out in Bajaj Finance as well.
Right. Just some flashes at the bottom of your screen. Kerala Chief Minister announcing that the state will be cutting petrol and diesel prices by 1 rupees per litre from June 1. It is up to the states, as the centre has also said recently, to tinker with the fuel taxes and bring some relief. There were 16 straight days of price hikes before some relief coming in today, but that was just a 1 paisa hike, so really no relief as such. The fuel prices are at an all-time high at the retail level. This is not going to have any material impact on the stocks of oil marketing companies, because this is more to do with state taxes and state revenues. But nonetheless, Kerala Chief Minister announcing that the state is going to cut petrol and diesel prices by 1 rupee per litre from June 1, which is the day after tomorrow. In fact, Kirit Parekh, oil and gas expert, is on the phone line with us. Mr. Parekh, of course, states are free to take their own call, and Kerala has done that. The question then is, do you expect other states to follow suit soon, because retail prices continue to remain at all-time highs?
Yeah, I would really, I think really that the states should cut their VAT rate so that their income is more or less the same as when the oil price was around $60 a barrel, and they could still cut down the VAT rate so that the relief of 2 or 3 or 4 rupees per litre can be had, depending on what the state's VAT rate is. So I certainly expect other states to follow.
Right,
but
Mr. Parekh,
but the states don't compete like this in this manner. Otherwise, we wouldn't have such varying VAT rates across all states on the petrol prices and the petrol and diesel.
In fact, Mr. Parekh, I wanted to get your view on the quantum that we're seeing. The Kerala Chief Minister is to cut prices by 1 rupee per litre at a time when we've seen, like Deep was just saying, 16 consecutive days of price hikes. How much of a difference does 1 rupee a litre make? And if we expect price hikes to then resume going ahead from here, do you expect that we'll see other states come in with a different number?
Yeah, I think 1 rupee is a very small reduction in Kerala in the price for a state, because what has happened is that when the crude price goes by $10, the state's VAT income increased by around 3 rupees per litre. So because the crude price has really gone up by that, the states are getting an extra 3 rupees per litre in their income. So they could certainly cut down the prices of their VAT rates so that the price of diesel and petrol comes down by around 3 rupees. And I also would like the union government to cut down excise duty by 1 rupee on petrol and diesel.
In fact, that's the question I was coming to you with, Mr. Parekh. If more states follow suit, is there going to be pressure on the union government also to look at additional measures here?
On the contrary, I think that the union government will see that now that the states have cut the prices, there is no need for it to do so. But really, in reality, I think the fact that the Indian union government and many states depend so much on the revenues they collect from petroleum products, taxes on petroleum products, which is very unhealthy. They should certainly have diversify their sources of income. And from that point of view, there is a strong case one can make for reducing the taxes or tax on both diesel and petrol.
All right, Mr. Parekh, thanks so much for joining in and sharing that quick perspective. Kerala taking a note of the rising fuel prices and providing some relief to consumers in its state. Let's see if other states follow suit or not. Markets on their part are, in fact, were trying to recover, but not ending the day in positive. Nonetheless, it is comfortably above the 10,600 mark. A sharp contrast from where we started today with a gap down of about 0.5%. So it has been a good recovery in trade today. It is, of course, expiry day volatility that's also playing out at close. M&M was the star of the day, 2.5% up, almost 3% up on that counter at about 900 rupees per share. Bajaj Finance had a good day of trade. Coal India was up and about. Yes Bank was looking good, 1.5% up. In fact, the Bank Nifty closed in positive territory. Yes, Kotak, SBI, HDFC Bank and IndusInd were the top gainers out there. You also had some support coming in from HUL, closing out at the highs of the day, now almost at 1,600 rupees per share, 1.3% up on that counter as well. Power Grid reacting positively to its numbers. Tech Mahindra was strong all day today. Z Entertainment was looking good. So was the Tata Steel, Indiabulls Housing Finance, GAIL as well as the UPL. The breadth significantly improved towards close of trade today. Advance decline ratio of 2:3 on the Nifty, but we started very weak. So since then, it's been a good recovery. OMCs, the big ones in focus, cracked today after seeing a bit of a pullback. HP, IOC, BPCL, all three of them were weak in trade. Hindalco was weak once again. Grasim was under pressure. Tata Motors, the pullback not sustaining. ICICI Bank lost some good ground. So did Maruti Suzuki, Sun Pharma, Bharti Infratel, Axis Bank, Vedanta and Dr. Reddy's. ITC was also down in trade. So was an Asian Paints and NTPC, and ONGC ahead of its numbers was also looking weak. From the mid-cap universe, to pull up the two rating agencies, Crisil hit upper circuit before closing higher by about 16%. ICRA also saw a sharp spike in trade towards close, was higher by about 8% at close of trade, and then 5%. So watch out for both of these counters. We don't know why. The reason is on Crisil, there was a big volume trade that happened, possibly a bulk trade. We will get you more details on that later. Reliance Communications 10% up, JSW Energy, Shriram City Union Finance, Tata Power, Torrent Power, Tata Global, Grow Finance and GSK along with IFL were also looking good. Merck upper circuit 20% up, Jindal Poly, Nav Bharat Ventures 20% up. Eros International 8.5% gain coming in on that counter. Astral Poly, Timken India, Bhushan Steel, Indoco Remedies, Reliance Naval, Info Edge posts its numbers. Future Consumers, BF Utilities, Cox & Kings, Relaxo Footwear, Barmer Lorry, Godrej Industries and Bombay Burma along with RT Industries were some of the other counters that looked good in trade today. On the flip side then, weakness for Dilip Bilkon fell over 11%. Auditor concerns coming in for this one as well. Manpasand Beverage, third straight day of lower circuit, 10% down over here. Kaplan Point, Aban Offshore, Sheila Foam, Motilal Oswal, Vakrangi, Bombay Rayon, HCL Infosystems, IFP Industries, Magma Fincorp and Avanti Feeds were some of the weak pockets in today's trading session. Ajanta Pharma, the pullback hasn't sustained on this one, resumed its weakness, was down 3.5% at close of trade as well. Ashish, it is the expiry tomorrow. Give us a sense of the trade setup ahead of that. We have been a little choppy in the last few days, but today you actually saw a decent recovery coming in before, of course, some of that last hour volatility took us into negative territory. But we've held on to the 10,600 mark, and banks again were looking good today.
See, the one thing is there that, if you look at large cap names, those who have good amount of, contribution to the index, they are still showing good amount of strength. So look at the names. Bajfinance today, almost after consolidating is getting ready for a strong upside, contributing almost 7-8% to the index. Bajfinance again showing very strong strength. HDFC Bank is one stock which is clearly on a strong upward trajectory, no signs of weakness, and now a good contribution coming from FMCG basket. So Hindustan Lever again hitting at an all-time high. So all these can keep index at an elevated level. But one thing is for sure, at a broad market perspective, we are still seeing a lot of distribution happening at an broad market perspective. So I think one has to focus on good quality names, and that's a trend we have been talking for last 4-5 months, that one has to be very, very specific with names. There can be intraday pullbacks for a day or two in stocks which have seen a sharper correction, but try to avoid those kind of names and take a bet on names like Hindustan Lever, Bata, Dabur, Colgate, Bajfinance, Bajaj Finserv, IndusInd Bank and HDFC Bank. So these are top quality names which are still showing signs of strength, and I think going forward in the next series we are also witnessing good amount of rollovers in these names, and also IT as a basket is seeing a good amount of rollovers. So I think one has to focus on these names in the next series for initiating a long positions.
All right, a number of specific counters in focus as we talk about the next series. Amit, in fact, I want to get your view on some of these big banks that have been on the move. State Bank of India today closed up about 1%. Sure. Yes Bank, top gainer on the Bank Nifty, 1.5% up at close. In fact, the Bank Nifty managed to turn positive and stay positive at close today, outperforming the benchmark. What really is the view that you have?
Yeah, so see, Bank Nifty, yes, of course, even the recovery that started from the lows, in fact, Bank Nifty very well outperformed the Nifty. So yes, Bank Nifty as a pocket has been doing well and outperforming the benchmark indices. Within this pocket, Yes Bank is something that really looks good. It had a sort of a breakdown on its weekly charts, and which actually got negated, which is actually a bear trap, I would say. The stock is behaving on a very, very nice manner. It's been consolidating. Once it gets past 350, it should definitely hit a new high. The chart setup is quite strong. My sense is new highs are definitely on cards for the Yes Bank.
All right, new highs definitely on cards for a Yes Bank. It has been a good pullback rally on that counter as well. Vijay, final word to you. ONGC, the last of Q4 earnings to come through. Oil and gas, of course, has been in focus lately. You also had news now of Kerala cutting taxes. OMCs were under pressure, now seeing a recovery because of constant fuel hikes. What's going on here? And would you be placing your bets in either of these upstream or downstream companies?
Well, as I said earlier, that companies like, we've seen some kind of a correction happening in crude, and I reckon that the upside for crude is limited, and we are going to see some downside happening until we see a major geopolitical problem in the Middle East or somewhere in the world. So with falling crude prices, there are a lot of industries which are going to get benefited. So maybe tires, or maybe paints should get benefited, or companies like Castrol should do well. So this is, I think, that should do well. We've seen fairly high amount of volatility in ONGC and oil due to the government policies, and probably the government is going to recover some kind of money from them. So I would recommend that better to stay away. As far as OMCs are concerned, again it's a mixed bag. Although I like IOC amongst all the OMCs, followed by BPCL and HPCL. So they have been recovering whatever losses they've made in refining due to the expensive crude. So I don't think that that is going to be trickled down to the balance sheet. The problem is if the government tells them to absorb certain losses, or like we used to see in the past. It's election year. There might be certain political decisions coming in future which might affect the companies in some adverse way. So, but still, if somebody wants to be in OMCs, I think IOC followed by BPCL and HPCL would be my preference.
IOC followed by BPCL and HPCL are Vijay's choice. Vijay, thanks so much for joining in. Amit, thanks so much for joining in today, leaving the markets with 10,600 comfortably held in today's trade after a gap down start. Let's see, especially on expiry day tomorrow, what's the kind of choppiness that is seen on the street. Banks closed out in positive territory. Broader markets were also a little strong in trade. We will take a very short break. We will come back with an exclusive on, of course, the AirAsia matter and what happens next, and of course a couple of other stories for you. Back in 2 minutes with that.